Hey everyone, it's Dale here. Welcome to this video where I want to walk you through my recent trade on the euro dollar. It was a swing trade, which means I was trading this on a daily chart, and I want to show you exactly how I was trading it from A to Z and how I apply all the things that I teach you in my other videos. So let's check it out. Here is a daily chart of the euro dollar. And the level that I was trading, it was a short level and it was based on a volume profile setup, a setup that I call the trend setup. As you can see, here was rather significant heavy volume zone formed right before this sell-off. Now, what the price likes to do, it likes to react to significant volume clusters like this one. So you can, for example, see it here, this volume cluster right there. Price made pullback to it and a reaction. So the idea behind this short level, behind this short trade was basically the same. Wait for the pullback, and when the price reaches the beginning of this heavy volume cluster, then go short from there. Additionally to this volume profile setup, there was also a price action setup, and it was that the price reacted to this level in the past, right? So that means that it was a support in the past and then it turned into a resistance, right? Because the support got breached, the price went below it, and that's why it turned into a resistance. As you can see, it nicely aligns with this volume cluster here, right? So we had two setups confirming this resistance level, this one. So that's why I went short from there. Now, regarding the setting of the trade, I placed the stop in here. And the reason why I placed the stop at this level was because it was behind this heavy volume cluster. All right, so this was the stop loss right here. This was the entry, and my take profit was in here. And the reason for the take profit was that there was a significant volume zone standing in the way of this short. See this heavy volume cluster. So I wanted to quit the trade before the price reaches that heavy volume cluster, because chances are that the price will react to this volume cluster and go up like this. I didn't want to risk it. That's why I quit the trade in here. Okay, as you can see, there's also a yearly view up, that's this yellow line, and that also could mean that the price could reverse there like this. Okay, so that's why I quit the trade there, because I simply didn't want to risk it. Okay, so this was the setting of the trade. Now let me show you how the trade went. I entered the trade here, but then it went against me, and here that the price hit my stop. Now, the way I trade my swings is that I actually do not quit my trade when the price hits the stop. My stop is actually higher. It's kind of a catastrophic stop loss. That's how I call it. And it is basically this distance plus 50%. Okay, if the price hits the catastrophic stop, then I'm out. But if the price just wicks past the standard stop, for example in here, it just went here to just take out that liquidity sitting above those highs. So it just wicked past it and I remained in the trade. Okay, if a daily candle closed past this red line, this stop, if a daily candle closed here above it, I would close that trade manually. Okay, but it didn't. It just wicked past this level, and that's why I remained in the trade. I call this approach the alternative stop loss method, and this is the way I trade all my swing trades. This is also what I teach my students. So all my swing trades are like this. Okay, and yeah, after touching the stop but just making this beautiful pin bar telling me that sellers might be jumping in, I haven't quit the trade. I was patient here and just quit the trade here as planned when the price reached this heavy volume zone and that view up. So this is how the trade went. I think that maybe the most important thing from this video, actually maybe two things. The first thing is that alternative stop loss method. I think that this is really helpful method, and I've been trading for years like this, and you know, it happens so many times that the price just wicked past the stop just to take out that liquidity, which is often sitting here above swing highs like these, and then just went my way. So yeah, this is my favorite approach to do the swings. I'm not doing this with intraday trades, just the swings, okay? Because they are slower. I have more time to manage the trade. Okay, so this is how it went. This is the first thing, the first important thing, the alternative stop loss method. Also, I think it's really important where you guys place the take profit. The way I do this is my take profit is always at the first barrier standing in the way. In this case, it was this heavy volume cluster. Okay, so yeah, that's it. That's the trade entry, stop loss, and take profit placement. I hope that this was interesting for you guys. By the way, if you want to join us and trade alongside me every day, I'm publishing those levels for all our members, so they can trade those levels every day with me. Let me show you real quick. This is from our back end. This is what I sent them. This is a swing trading table, and that level which I was just showing you was in here. See, that's the short at 1768. See right here, 1768. I always give the levels in advance, so the members can prepare for the levels, place their limit orders there, and then trade the levels alongside me. So yeah, if you guys want to join us, you are well welcome to do so. Just visit my website. It is at traderdale.com. If you click trading course and tools in here, then it will bring you to this page, and in here you can get into one of my courses and get my indicators as well. Alright, so thanks for watching the video. I'll be looking forward to seeing you next time, and until then, happy trading.